Right, so we've had the blow off in gold into longs. So I've missed that trade. And the VIX blown off to the downside. So there's your rally in stocks. We've also had the dollar perk up. So one would expect a dump in stocks at some point. So we've got our high of the day. Sorry, a new low of the day, high of the day. In the NAS, in the Dow, and the S&P. So this is trap volume. What we're waiting for is a sell on one of these indexes, whatever gives us the cleanest and best trade setup. In terms of the best trade setup, the Dow is the most probable. We had the break of structure in London over here. So this move, the break below the Asian lows, the day, over the day. We had that break. But what we didn't get was a follow through low. Instead, we've spiked up. Look at oil, we've had a break of structure. I'll turn this white. We had this break of structure. We've had a subsequent pullback. Hasn't given us the 38.2. But it's broken structure again. It's not inside of this trend lower. On major support over here. Could be bearing up for a scalp to the downside. Well, that's a pretty strong correction, very strong correction, really. You want to have seen that sort of rounding off, not spiking up, so we'll move away from that. Now we've got our M formation, break of structure. We're looking for the move up to sell. So that's our first 15-minute candle red close. So we're in on that. We've had the M break of the trend line. M formation, retest, engulfment, break of trend line, break of structure, down we go. Yep, stopped out on that. We'll try something on the Dow. We had weakness earlier in the day. So this Dow, we've had a break of structure over here, pump up, pump up, pump up. So you've had this raid of these equal consolidative lows. We've had a break of structure here. You expect it to come back in before they move up. So that's what we're looking for. A 50% retracement into here. And there it is. Just didn't give us an opportunity to do anything. So we're in on the S&P instead. That Dow just walloped down on the open into the target. Rail tracks on the NAS. I've added another position, another half risk. How frustrating that. Huh? The Dow didn't give us anything on the entry. In hindsight, we could have been entering in here. We've got an M formation on the 15 minutes, so that's a nice topping pattern. Got a minute to go until the close, that is. I'll be moving to break even when we get below this candle in this marker on a 15-minute basis. So unfortunately, we can't get there yet. So we're looking for a move up and then an engulfment. We'll take some off here. We're seeing the retest of the M formation neckline. It's a horrible retracement. Might be wise to close this trade, I think. Yeah, this retracement's way too strong for my liking. But if we prove wrong, we can get in again below the break. Right, we've gone short there. Right, I think we're going to get this 5-minute close below our structure and a 15-minute sell-off. Yeah, looks like we're going. Added more to the position. We're on the front side of this trend. Got the M formations, topping patterns in place. We're coming up to the next 15-minute rotation. We're getting this pull up into the neckline from the blow off. Looks like we're going to get a lovely pin. Come on, baby. 5 seconds. Right, now let's have the engulfment. This is the engulfment taking shape. 20 seconds to go until US factory orders. It's not red news, but it would help if it's a poor number. Right, we're now on the 15-minute rotation. So there's the blow off. Pretty shitty factory orders. Right, I've had to reduce my position at a loss. Don't like that spike at all. I'll add to the position if we get the engulfment. I mean, we've had the break of structure. We've got this M formation with a pull back into the neckline. It should be acting as resistance at this point, but it's not. Right, so we've added to the position, just 0.5%, not 1. We've got 1.5 on at risk. So we've got 6 minutes or so for this 15-minute rotation to stay as a pin. And then the thesis is that this is a topping formation. We've had the pullback attempt and then the blow off. Let's M on this 1-minute chart. We've got M formation here, M formation here. All of this volume is trapped on the front side of the trend. I mean, it's just It's got to melt. New lows. And this is pretty pepped up stuff, so you'd expect this to really go and not come back. Right, there's our hammer. Now the blow off. Come on. I've added more to the position. We've got a strong close below the lows. Stop above the 20. Front side of that trend. Nice 15-minute bearish scenario. We've got our stop above the prior day's highs. Right, so now we're looking for the blow off. There's 15 minutes. Oh, here we go. Didn't work out. Right, time to walk away. Fucker of a day. Just couldn't get what we wanted. And have one last attempt. Let's pull back, tracement, roll over. So in hindsight, we were absolutely right on the Dow. And what should have been done was the first bounce. With the blow off, so you don't want to chase the hot chick, you want to see that pull back, and then the engulfment. This was an entry on this engulfment. Stop above the pin, and let's just get rid of all this shit. So engulfments are short here with the and targeting. So we've got the Asia, London. Well, you've got all of these longs. We could have gone into the point control over here. Let's tie that up. Over here somewhere. Giving us a target to have reached. Not quite, huh? Not quite. But you would have been taking money off. But looking at the fair value gap, it's down to here. So if we've done that instead, or acknowledged it at least, then that would have been a nice trade to there. Yeah. That's 2 for 1. A little bit of a runner. Just leave it on the market, 80% here, and let it run. But let's see what getting on with this. You see, well, glad that we got out there when we did. Looks like we're running higher on the S&P for the day. So, impulse correction, impulse higher, targeting 4170, 4180. Get an entry over here for a long. Right, we've taken a long here for a high target of 4180. This market refuses to go down. The The Dow, which was the trigger for the day, is consolidating at the set targets from earlier. So the thesis is, well, A, it doesn't want to go down. We've had this correction into the 61.8 of the New York day. You've got this consolidation and breakout, and this can go, if we were to measure the breakout, sorry, the consolidative zone, the lows to the highs, removing the fib. We can go a full 100% measure of this consolidative zone. Let's get that properly done. There you go, it's taking off now. Now I can't really afford to lose any more than that. I have to move this to break even. It's a strong move. We're going to move this target and just let that run for the day. So it's pretty ambitious. We're looking for 80. The ATRs run about what? 60, 68. Well, we'll take some off up here then. Moved across to the daily chart and then into the 1 hour to look at the last time we were up at these sort of levels. So if we just pull that up. So we're reaching, we've got to take some off here. Take 80% off and let the rest run. So there we go. We've got back some of our losses. So we're down 1% for the day. Nothing to cry about. Right, so going back to these targets then, the rationale behind that. When we go to these daily charts, as you can see, we've broken structure over here and here. It's a strong move up. Bound to see a correction. But if we were to go over to this area over here, we can highlight that with a clips it. Okay, so this is the area that we're targeting, and ideally we want to be moving up to the highs. Go to the 1 hour. Pull this all the way back to the 1 hour. We have our bottom of the impulse, correction of the impulse, the highs, and then the volume point of control. So we're heading up to those lows there, and that's what we'd expect to achieve, if not a follow through. So we've taken some off here, that's the high of the day, so that's all good. We'll let the rest run.